Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis, introducing a breakthrough in cattle deworming technology from Zoetis, the only prescription cattle dewormer with 2 active ingredients in 1 dose. Meet Valcor, doramectin and levamisole injection. Now you can achieve effective parasite control in 1 product instead of 2. It's never been easier to get tough on tough worms. Get tough today at valcortough.com. Do not treat cattle with Valcor within 15 days of slaughter. Not for use in female dairy cattle 20 months of age older, including dry dairy cows. Not for use in beef calves less than 2 months of age, dairy calves, and veal calves. See full prescribing information at valcortough.com/PI. U.S. spot natural gas prices fell 15 cents last week to average $1.40 per million metric BTU at the Henry Hub terminal. Henry Hub physical spot prices are linked to the pricing of the NYMEX futures contract and have important historical value as a time series. At $1.40, spot natural gas prices are not just finding their lowest price post-COVID, but are actually the 2nd lowest week on EIA record. All-time lows in the dataset were made on December 7, 1998 at $1.34 per million metric BTU, meaning spot LNG fell to a 26-year support. After accounting for decades of compounding inflation, today's price at $1.40 would be equivalent to LNG prices below 75 cents in the late 90s. The United States is currently the world's largest LNG exporter, sending roughly 17 to 18% of production to overseas markets. The largest share of U.S. exported product is sent to Europe, averaging 36% of U.S. export volume since 2022, replacing former Russian supply in the region. European countries just experienced their warmest winter ever. Compared to a 1979 to 2000 baseline, northern Atlantic air temperatures were 1.49 degrees Celsius above average. Mild temperatures combined with favorable wind and solar generation lowered need for natural gas and kept European inventory outflows at a slower pace. According to data from Reuters, depletion rates across European natural gas inventories were roughly 25% below 10-year average this winter, substantially lower usage. While Europe was reducing natural gas demand, the U.S. continued to squeeze out greater volumes of supply. Natural gas well withdrawals are released on a quarterly lag, but can be forecast somewhat reliably by matching rig counts and applying trends. First quarter U.S. natural gas production is forecast 11% above Q1 23, surpassing 4 trillion cubic feet of production for a monthly average. With added supply plus weaker demand, U.S. domestic natural gas inventories have swelled by 38% above the 5-year average, ultimately driving Henry Hub prices to the aforementioned extreme price lows of last week. Thanks for watching. Remember to visit CattleFax.com to become a member, see the latest market news and analysis.